After an election, I always get a million questions about its impact on the real estate market. 2024 has proven no different. From 1996 to 2023, I looked at data and dropped them into the following categories of non-election years, midterm years, and presidential election years. In non-election years, sales peak in December and then drastically drop off by more than 200 units in January. As the spring season kicks in, there's nearly a 200 unit increase in sales from January through March. This seems consistent with what generally people think about the market during this time of year. In midterm cycles, sales decrease in November or December and then continually rise with a high in March. We don't see the drastic dips and peaks, and the biggest change in sales appears to take place in January, following the election. Between January and March, there are more sales that occur during this time period than non-election years and presidential election years. All right, let me complicate this a little further. The United States House of Representatives is up for election every 2 years. In 2023, the Committee on House Administration changed the rules to where members of Congress could receive per diem when they're in session. In other words, that means that they could get reimbursed for lodging and meals if they do not own homes, but instead rent when they're in session. Many members are opting to rent rather than buy because their offices are reimbursing them. Since this rule just took effect, we're going to have to look at data from 2024 in order to see if it changes the impact to the rental or sales market in DC. Now let's look at presidential elections. Sales are initially consistent with the other categories. There's a sharp decline in sales in December. The biggest increase occurs in February. There are 68 more sales than in non-election years and 43 less sales than midterm election years. The impact of the election seems to wane by March, and activity is less by the beginning of the spring market. Seeing such minimal impact, I thought that I would look at rental data covering the same time period and same categories. In non-election years, rentals seem to be fairly consistent, but dip in February and begin to rise again in March. There's a slight increase in rentals in December, but it's hard to see what the impact is in December because it's typically a bad time of year to rent, and a lot of apartment buildings are offering incentives, which I believe skew the data. Now, let's look at midterm years. Rentals are consistently higher in every month except for February, where there was only a 3-unit difference than non-election years. The numbers are just slightly higher at about 7 more units per month than those of non-election years. After a February low, the increase that we see in March is almost identical or mimics what we see in non-election years. October, November, and December are the months that see the highest increase in rentals, but 2 of those months precede the actual election. If there is an impact, it's very, very minimal as a result of the election. Now let's turn to presidential elections. Across the board, rentals are lower than midterm elections and non-election years. Across the board, they're lower. The gaps are largest between non-election years and presidential election years. The biggest dips in rentals are in January, but increases like the others in March, albeit at a much slower pace. I'm trying to figure out what the causes are and why presidential elections really don't have an effect on rentals. I'm thinking that maybe people are staying put, or because of the time of year, leasing officials, realtors, and other professionals are asking and requesting for a longer lease period that gets them beyond these timeframes. Some other impacts to the market in 2025. With Musk and Ramaswamy leading the task force to cut the government deficit, it's become the topic of daily news. Bringing workers back, aka butts in seats, and reductions in force, also known as RIFs, are factors that will further impact the real estate market in 2025. Those people that have been enjoying teleworking may have fewer days, if any, to telework from. And for those that are living outside of DMV in shoulder states such as West Virginia, Pennsylvania, North Carolina, might have to reassess their living situation. Will they rent? Will they buy? We'll see. If the federal government calls its workers back, you can guarantee that the private sector is going to do the same. And those office buildings that we've seen in downtown that have been vacant and empty, and those office suites are going to be reinvigorated and populated again with workers. Those workers are going to have to do similarly as federal workers in finding new living arrangements. This could have other positive economic impacts to our central business districts. Now, if there are large rifts or people decide to quit and they happen to live locally, those individuals might sell their homes and move to cheaper states where the cost of living is less. That will also impact the market. 2025 will be interesting to watch. Even without these factors, I suspect activity will be greater than 2024 and 2023 due to pent-up demand, low inventory, and while prices are still high, we're starting to see them stabilize. This is Justin with 4J Real Estate, wishing you a happy 2025.